Hi guys, so in this video we're going to talk about the studies that I've got placed on the chart. So we'll start off with the Renkos. These are Flexi Renkos. I've got these as a 731 setting, which I found is pretty good for the current market conditions. Sometimes I do change them. I have them to 641. That's another setting that I like to use at times, but yeah, for the time being we use 731. And then within these Renkos, you can see we've got some odd colored bars. Well, basically, let me just drag this across a bit more. Basically, they just show delta and volume. So when we've got a blue candle like this, means there's high buy side delta. So a lot of market participants, getting in, trying to get long, getting market executions. So we've got high buy side delta and high volume. That's what this blue color bar means. And then when you see a turquoise bar, that means there's high buy side delta, but there's not so much volume, but the majority of participants are long. So that's basically what it means on that color. Now, if we go back and find, oh look, this would be a good example. And then when we got magenta, that means that there's a lot of sell side delta. So a lot of aggressive market participants trying to get short. And then when you see the red one like this, that means there's high sell side delta and high volume. Quite often when you see, I mean, you can't use these and trade them blind. It doesn't mean just because you see that the market's going to reverse and go the opposite direction. But you can use them as a quick visual aid as to see, the state of market participants and how they're getting, how they're positioning themselves. And now if we lead on to this one, which is a profile, it's not a volume profile. This is a delta profile. So this complements it quite well, actually. So in this instance, when there's loads of red activity there building, that means, as you can probably guess, there's loads of sell side delta, loads of people getting in the market, trying to get short. And then when you see lots of green, it means there's lots of buying coming into the market, lots of buyers. I mean, in this aspect, we had loads of selling coming in. You can see, there's loads of volume and loads of delta going on, sell side delta, and the market did actually just completely sell off then. There's no absorption. So all these participants getting in actually, well, it looks like they made a lot of money if they held their positions. But there are other occasions where it's not as easy as that. Oh, look, here's a classic example. So here you can see there's so much buy side delta, but the market's not going anywhere. They're not getting anywhere. They're hitting a wall. That's classic absorption. So what we got here is we've got a whale, a higher time frame investor, market maker, if you want to call it that. You've got them there sitting at this price level, just absorbing all these buy orders. I'll take that, I'll take that, I'll take that, in like Pac-Man style. So they're absorbing all this liquidity what's coming in. They're getting all their orders filled. And then when there's no more buyers left, the market just sells off, which is what happened. And as you can see, the market then just carried on down. So that means that all these buyers, obviously, they've probably got their stops down there. So they're either in or down, or they've just been stopped out and they're basically screwed. And then actually, while we're here as well, this is a good example, these grey bands. So these are your standard deviation bands. That I've got, how I've got them set is the outside of this grey band at the top, that's a +2 standard deviation. And at the bottom, that's a -2 standard deviation. I only use these personally when we've got flat VWAP, which means that we've got a balanced day, we're rotational. So on the TPO chart, you'll see that the market profile will be building a nice round distribution. So that's kind of means there's value being built, price acceptance with accepted price in that area. So the best thing to do in that situation, I know all these people are trying to buy here, but what the sensible thing would be is to fade the extremes. So like from here, you could fade 2 standard deviation, fade back to VWAP. I mean, you're only looking at about 10 pips, so it would only be a scalp. but you could fade back to VWAP, take some profits. If you're feeling brave or got another position running, you could try and reach the other side of value of the deviation bands, and then you can again fade back in, fade back in. That's the sensible thing to do when you've got a flat VWAP like that, until you see the breakout, and then obviously you can reassess the situation, because the market's like change personality, if you like. But that's what these bands are for. That's all I use them for. We'll now go on to the VWAPs themselves. So just zoom out. So this blue line, that's the current day, the day one VWAP. So that's today's VWAP. The magenta line, that's day two VWAP. So that's yesterday's, the previous day's VWAP. Now, I don't think no one uses day two VWAPs, but I like to have it on there, because I've noticed sometimes, like you can see here yesterday, that the current day yesterday was currently getting defended on every time we touched VWAP. So those participants might still be active. And as I say, we came down into London session, we sold off, and then we pulled back through the current day's VWAP. And then look, just around yesterday's VWAP, we saw, we can see that easily by this two lots of sell side delta candles, Renkos. We can see market participants trying to get short again. So trying to maybe defend their positions, or algos might have been messing around there or something. So it just gives me a head up. I mean, I don't trade it blind, and a lot of the time you can see it might just trade through it. But if I've got a big position in the market and I'm coming up to something like that, I consider that, a possible like line of resistance. So I look to scale out some profits, because I think the best thing to do is to always be trying to take some profits as soon as you can, just so you've got some money in the bank. Because the amount of times in the past where I've, had like a bit of an ego and thought, oh no, we're going to hit this level up here, and then we've got to the VWAP or whatever, and then reversed. I'm like, oh, days, and then I end up with half the profits that I could have had. So that's why I use this anyway, the magenta one. And then we've got obviously the weekly VWAP. This is like the, what do you call it, a bronze color. Again, when prices are around that area, I expect that something could be happening. So it's good to profit take there, or if there's exhaustion signs and you're looking on footprint with other confluences such as value areas or whatever, you might look to get short or long or whatever around there. Same again with the monthly VWAP. That's the olive color line. Same principle applies. So that's the VWAPs dealt with. These horizontal lines, I've basically got that as kind of like an initial balance. So that's 7 a.m. Greenwich Mean Time to 8 a.m. Greenwich Mean Time. And quite often, so yeah, that's like Frankfurt open till London open. And quite often when price breaks below or above this area, there might be an opportunity to get a few pips out of the market if you're scalping, or just, you could fade it down to the next point of resistance. Not always. And you'd obviously need to confirm it with order flow and looking at the footprint or the DOM with stacking orders, or, profile or whatever. But yeah, I know some traders that do actually, I think they call it the London breakout, and they do actually use that as a strategy. I mean, I'd never do that without other confluence, but I have heard of some people that do that. But anyway, so that's what those lines are for. And then just these vertical lines again, that's 7 to 8. Because I'm not using a time-based chart, I've got the Renko bars. I like to know roughly when 7 o'clock is, and I like to know roughly when 12 to 1 is, midday to 1 p.m. So I just have these set so I could just have a quick look in the market and see what's going on around those times. That's pretty much it. This is the bid against the ask difference bars. So when you've got lots of green like that, there's lots of green, lots of buyers coming in the market, and obviously when it's red, there's sellers. That's the basics of that. But basically, I'll obviously do more videos and go more in depth into how I trade these specifically. But for now, I just wanted to just sort of get some content out there for you to roughly know what you're looking at once you've got these charts installed, because otherwise you're going to be looking at these colored bars, for example, and thinking, my days, what are these? These don't make sense. And you're probably looking at this profile thinking, is that a volume profile? So yeah, now you know what they are. But anyway, as I say, I'll be doing more videos in the future, but for now, gives you the basic idea of what you're looking at. Okay, I think we're going to wrap that up for this video. So cheers, guys.